Welcome to the Creating Wealth Simplified podcast. My name is Lauren Wells, here with my co-host, Chris Seveny. We're committed to providing you with the knowledge required to build wealth through real estate investing. Tired of consuming content about real estate? Stuck in analysis paralysis? Ready to do your first deal? As a member of our community, you will learn how to go from consuming content to taking that first step into the world of real estate investing. Our show is not about getting rich quick, but about providing you with the knowledge you need to take action. Join us as we speak with experienced investors who share action tips on how to escape the corporate world, start a thriving side hustle in the world of real estate, and go beyond your W-2 or 401k. My name is Lauren Wells, and I'm here with my co-host, Chris Seveny. Welcome to the Creating Wealth Simplified podcast, where each week we bring you education and information that will help you take your next step, building wealth through real estate. So piggybacking off of our last podcast where we talked about 5 strategies you should use before investing with a sponsor, we talked about kind of the bigger overall strategies. However, we wanted to follow up with 10 questions, our top 10 questions you should ask a sponsor before investing. So ready, Chris?
I am ready. How are you today, Lauren?
I am pretty good this Friday afternoon.
Yes, Lauren has been working very hard today, communicating with the team. So we've had a lot of team conversations today, which have been very productive. And it is a wonderful Friday afternoon.
It is. Like I said, top 10 questions. So we'll kind of go through these and both answer and talk about why it's important. So how long have you been in real estate investment? You're like, do I answer?
I was just like, okay, do I answer this or no? So this is one of the questions you ask people to get an understanding of their experience. You're trying to gauge their level of expertise. And for any of these questions, there is no right or wrong answer I'll say for the most part, I'll use that caveat, but, asking somebody how long they've been in real estate is important to understand. Is this their first deal? Have they been doing it 10 years? And it's really the intro question that you want to get people to answer to give guidance for where the conversation's where you want to take that conversation. Because somebody who's been in real estate, 10, 20, 25 years, the conversation probably is going to go very differently than somebody that's been in the business for 12 to 24 months.
Yeah. So I think it sets expectations, like you said, for the conversation, but also, like you said, there's no right or wrong answer, but it's good to know, like, it kind of is where it helps you assess what your risk tolerance is and really steer that conversation. Second question is, have you or any of your companies or properties filed for well, there is a wrong or right question here, I would say. Filed for bankruptcy? If so, what happened and what changes have you made?
Yeah. So you'd think there is a right or wrong answer, but if somebody filed for bankruptcy in 2008 during the downturn, that would be a different answer compared to somebody from 3 years ago. Now, it would, of course, give you a lot of hesitation from somebody who did file bankruptcy during that period of time, but they probably also, and again, it leads to the next questions of, what did they learn from it? How did they change things? Which is really what's based off of this question. The question, and again, you mentioned about risk. Would you rather have worked with somebody who's been in real estate 15 years and in the first 3 or 4 years they filed?
I was just going to say that. I was just going to say, well, also if they filed for bankruptcy in 2008, then you're like, oh, this isn't your first rodeo. You've done this quite some time. You have some experience and you've probably learned a lot since then. Mm-hmm. So I think.
Yeah. Would you rather have that or somebody who's been in real estate for 2 years during an economic point of where, anybody could have invested in real estate in the last 2 years, 3 years and made money? So,
yeah. And so actually what we should do is, Chris, we'll go through these and explain the importance, and then we can go back through them really quickly and you can talk about your answer to them.
Sure.
So the third question is, have there been any criminal charges or investigations against the company or any of its principals? Will the main principals survive a background check? Yeah,
this is one that's absolutely, to me, an absolute,
wrong answer. There is a wrong answer.
Wrong answer. Yeah. If somebody's ever been, had criminal charges against them, especially if it involves any type of financing scheme, or you do a background check, or they have significant number of judgments against them. That's to me just a complete red flag of, they may have answers for those items, but you're going to hear their side of things. Kind of like, if you're going for an interview and somebody gives you a resume and references, do you think they're going to give you, a bad resume and references? So this one, to me, there's an absolutely wrong answer.
Yeah, I agree. Of all the questions we have, and this comes from a list of 20 questions, which we actually have on our website, but of all of the questions we have, this is probably the one that, there's a wrong answer.
Yeah. And the other thing is somebody may say, oh yeah, we're good, we're clean. You still need to go back and do a background check on those people because. Yeah.
And the beauty of technology today and, the internet, you can probably Google these sponsors and find out kind of what their background is and if they have any not so awesome past, we'll say.
Correct.
So question number 4, do you know approximately how many deals the sponsor has gone through full cycle?
Yep. So this one's really, again, it goes back to experience. Yep. If somebody's got 5 deals going on right now, but they're all within, their, what I'll call the honeymoon phase, where they're still within the first 6 months, then they really haven't been through a full cycle or seen, they've been through the acquisition phase, but they haven't done the management or disposition. So it's very difficult to really see how well they've performed. So it's important to understand how many cycles they've gone through, and again, what that type of cycle was throughout that period of time as well.
Yeah, I would add to that. So it's not just about the deals, but also what types of deals. Like, have they done only joint ventures in the past and now they're doing their first fund? So is this their first fund they've ever done? Have they only done funds and, now they're doing a mentorship or whatever it might be? I think it's important not only to know how many deals they've done, but what types of deals. Yeah.
And one thing I'll add is, some people will give you a range, because when people ask me, how many deals have I done? I know the range. I don't keep track of the exact number because, we have a lot of deals coming and going at any given point in time, especially we invest heavily again in non-performing notes. So we may pick up 5 assets one week and sell 2 the next week. And we've been through many of those. We've picked up rental properties consistently. We've done development deals. I've done development deals in the past. As you get, 25 years, again, my age, you kind of stop counting how many deals that you've done and just kind of give a ballpark or an estimate. So don't be surprised if somebody just kind of gives you that type of number. But if they say, yeah, I've done a lot. Well, is a lot like 5 or is a lot like 50? Make sure you kind of do get at least that ballpark range.
Yeah. So I love this next one because I truly believe the philosophy and the values and everything that go into a company are equally as important as everything else. So this one is, please describe the company's overall strategy and philosophy. So
this is the one that will probably have the most back and forth, and you want to really have them give, I'll say a Chris 70 answer or a very long-winded answer, because Lauren always says I talk a lot. So an example on this is on a multifamily deal, is their philosophy to, buy and hold it for a long period of time? Is it to renovate and then turn around and flip it? I work for companies that they call them merchant builders, that they would buy raw land, get it developed, get an apartment building up on the property, get it fully leased, and turn around and sell it within 24 months of getting it fully absorbed. I've worked with other developers who would do the same thing, but they're like, no, we're going to hold this for perpetuity. Those are 2 completely different strategies. They're 2 completely different business plans. Neither one is wrong, but it's also good to know, it will give you a timeline for how long your money's probably going to be in the deal, even though it should be stipulated. The other is, on notes, multifamily, are they just 100% in it for the money? Like in non-performing notes, are they, hey, we just go and we foreclose on every single borrower? Or is it their philosophy, we want to try and get them reperforming and get them on a modification to then liquidate the loan later on? Again, two different strategies, two completely different P&I profit and loss, templates on those, but it's something you kind of want to know.
Yeah, I think, you talked about multifamily and you touched on notes a little bit, but I think especially if you're looking at investing in mortgage notes or some sort of fund with that, there are two very different philosophies. One is, like you said, purchase asset, go straight to foreclosure, like don't negotiate at all with the borrower, don't really look at anything but getting through foreclosure. Mm-hmm. And then there's other companies that do try to balance, if we can work with the borrower, like let's work with them. Let's see what happens. Let's see the whole picture. So you're investing in two very different types of companies.
Mm-hmm. So the other question that plays off of that is where, it also is part of their philosophy is where's your profit derived from? And yeah, you want to make sure, again, it could be diversified. Again, in notes, we attempt to buy them at a significant discount where if we get the borrower reperforming, there is profit involved in that aspect of it. If we cannot and we have to take the property back and turn into an REO, then there's profit based off of that. So we get different types of strategies. If you're solely just buying it to foreclose and you can't, then that can impact your profit because of your acquisition cost may have been higher and not be able to make the numbers work. Again, back to multifamily, I'll mention that as well. If your whole goal is I'm going to buy it and I'm going to jack up rents and raise rents, and that's where all my profit is from, and sell it at a low cap rate, and then you can't raise the rents and cap rates have increased, then that has significant impact on your exit strategy because it was all based off of an exit that you're not going to be able to get to. So being able to understand that and have flexibility is key. Yeah. So it kind of leads into exit strategy, but also basically kind of like to shorten it down. It's basically how do I, as an investor, how do you make money and how do I get paid? That's what you're taking away from their answer. That's what you're hoping to take away. See, I told you I would talk a lot about that. Yeah. In short. Next question is, what geographic markets does the company target? Yeah, this is, again, just for your own knowledge, and there's no right or wrong answer, but it's also good to understand, are they targeting, say somebody says, yeah, I target San Diego, LA, and San Francisco. That's very different market than somebody says Flint, Cleveland, and pick another city where it's typically have much lower cost of housing. Are they diversified in their portfolio? Whereas they invest in different markets, or are they also in one market? And are they, with being in that one market, do you see that as a potential risk? Yeah. And then there's just investors, if you're one of them, who just like investing in certain areas. Yeah. So, like you're in California, great. Like I know California, I want to put my money there. Whereas other people would be like, absolutely not. I'm out of California. So just again, kind of like we talked about in the beginning, there's no wrong answer. All of these answers are just meant to give you the information so you can make the decision you think is best for your strategy, your expectations, and the risk you're willing to take on. Next question is, have you ever lost an investor's principal? So this is one actually where people would think, oh, there's only one answer to this, but there really isn't, because it would impact significantly somebody's perspective. But again, if you said, yeah, I had a deal back in 2008 that we did a fix and flip and I partnered with somebody and the economy happened, or we lost financing, we couldn't refinance. People who have been in this business long enough, lost money. Now, the question though is, and it's interesting the way this is phrased, because my initial reaction is, have you ever lost money on a deal? Which that's what popped in my head first, but you're asking if you ever lost an investor's principal. Yeah. So that has a different effect. And you might want to pose those two questions together, because I've lost money on a deal, but I've never not returned somebody's principal back to date. So for someone who might be new to investing, can you explain what you mean by that? Yep. So I've had deals where, let's say, Lauren, you decided to invest in me on a non-performing note, and you put 20 grand in the deal. And at the end of the day, the note only returned $15,000 because of cost, expensive, wherever the case may be.
Yep.
So in that deal, we started with 20, we ended up with 15, we lost $5,000. Now, this is where you get different sponsors doing different things. Some sponsors would be, sorry, Lauren, we lost $5,000 on this deal. Here's your 15 grand.
20 grand, just to, again, kind of slow it down a little. 20 grand is what you would call the principal.
Yes.
Yes. Okay.
Sorry.
No, you're good.
Okay. Lauren's got her fishing pole reeling me in. She needs a little button that works remote that she can just hit me to zap me to quiet me down. So your principal, that 20,000 at the end of the day is only 15,000. So let's think of a stock market. If you invested in stocks, 20,000 stocks, and all of a sudden the stock is only worth 15,000 when you go to cash it in, you kind of lost $5,000 on that. Now, if you're dealing with a sponsor, typically they are not required to give you the $20,000 back. But I've had some deals that have gone south like this, but I did give these sponsors their full principal money back. I think the largest probably has been $3,000 to $5,000. It was not a significant amount. What I consider significant, others may consider it significant, but it goes to show that you care for those investors in that sense, and it, I think, breeds a lot of trust.
Yeah, kind of like that investor first philosophy. Yeah. Question 8. I love this one. How do investors receive accurate information about the status of their investments? I'll talk about it.
Yeah, but I'll let you go. But the one thing I'll mention, actually, I'll wait till you say it and then I'll add my 2 cents at the end.
Okay. So this is something that really shocked me when I started in this industry, is like there was like no uniform way investors were getting updates or information on their investments, their distributions. So I think that asking them and knowing, like, again, it's kind of like what you expect. If you're someone who wants to receive like a monthly statement or wants to be able to log in to a portal or wants to be able, or doesn't matter, just like, as long as it hits my bank account, that's fine. Like it's good to know, one, what kind of information and how you like to receive information, but also asking this allows you to see if that aligns with what you want. I know like we spent a lot of time building out an investor portal to give that transparency. I just also think it's with the way technology is, someone being able to go in, log in and see what they've contributed, what they're receiving. It's also speaks a lot to the sponsor and the transparency that they have with how investments are doing. So that's just, I feel like it is so important. One, knowing what kind of information you want to receive and how often. And then where does the sponsor stand on how they distribute their updates?
And this is one where it's very easy to call out a sponsor. And after you ask the question, they say all this, say, great, can you send me a few examples of the reports you send out? Mm-hmm. And if you don't get them, then that to me would be a showstopper to see how they're doing it. Because the easiest way to tell whether people are paying their investors back is by showing a report, because if they're paying somebody back, I guarantee you they have reports showing how much they paid somebody.
Yeah, obviously they can, and it's not like, they can redact all of the information. So you shouldn't hear like, I can't give out that information. If they take off all the investor personal information, then it should be easy to get you a report. So again, I think it just goes to that transparency of like how your investment's doing, where your money's working. And I feel like that's super important. That's a big one.
No, that is a very key one to focus on, and make sure that is kind of a follow-up that you get that information.
Are you sponsoring any other investments? If so, how many? Why is this important?
Yeah, this is important just to understand their bandwidth. Mm-hmm. And, how many deals do they have going on? What is their team?
Yeah, involved? That was my follow-up. Like if they do have more than one deal going on, like what team do they have supporting them?
Mm-hmm. Yeah. For example, I've done several funds in the past, and I was essentially running those just you and I, over the last year plus. And we had, I think, very good software that we spent good money on that I'd say takes the place of one or two people. But as we started our Regulation A plus offering, we realized early on, hey, as great as we are, Lauren, the two of us just couldn't handle it. I was hoping to try to get, there's a smile for me. I was going to say, man, I'm smiling today. If anyone watching on video, Lauren is now smiling. So check out the video and subscribe. See, look at that. You can see your smile.
We have Tony, our marketing manager, listening in, who just gave us the thumbs up. So good plug, Chris.
There you go. But no, it's important to know. And as we put like our offering together, we brought on, Tony, who you just mentioned, to assist with marketing. We have a full-fledged marketing company as well. We've got 2 asset managers. You've got another person, investor relations. We got 2 other people in asset management coming on board. We have an acquisitions person coming on board. So we are making sure we have the bandwidth to manage what we have going on.
Yeah. This question isn't really like, do you have a lot going on? It's like, what do you have the support to you run this investment, run this fund? And who is that support? Is any kind of the takeaway there?
Yeah. And then, can kind of tag on to that is great. You have the support. So if I do have a question, who do I call?
Am I going to speak with a real person? I had someone ask me the other day. So after we invest, if we have any questions, like, are we going to get like an automated response, or is there like a real person we're going to be talking to? Which I thought was interesting. So
I can tell you, if it was me investing and I either didn't get a real person, or I got a call center outside of the United States, I would lose my mind because
and it all comes down to who you are and what you expect.
Yeah.
So I would also lose my mind though. So in that same boat. And then the last question is, what are your targeted and historical returns?
So this is kind of a loaded question. This is where people will do their Texas 2-step on the dance floor for historical and current returns. So it's important just to understand, what is their target and what have they gotten? If someone says historically we get super high returns, then it's like, okay, what's your appetite for risk? Because typically higher returns do yield higher risk. Now, it's not in every situation. It depends a lot on the asset class and their expertise and experience. But for me, I would always say, when people are promising 20+% returns and they're saying, hey, that's historically, over periods of time, absolutely. Can you get there? I mean, again, look at stocks. Stocks, pick a period of time, can get 20-something%. But over time, if people are promising returns that high, to me, that seems overly aggressive, and it would cause concern for me. And again, I think a lot of people want to hear high numbers, but sometimes
also, I think the timing of when they invested makes a difference on the returns. So kind of seeing like the bigger picture, not just, like 10%, 12%, whatever they throw out, also when was that? Because I think where the economy is, what's going on at a macro level has a bigger impact on that as well.
Also the asset class, because if you do new development, for example, and you were doing what I mentioned earlier, merchant build of an apartment building, those returns are very, very high. But I've also been a part of a company that was making 30+% year over year. And then 2007 and 8 hit, and they literally in the span of 8 months completely went under and had to shut their doors.
Yeah. And hopefully before you even get to these questions, you should know the asset class and have done the information and research that we talked about on our last episode.
And understand what it's based off of. Is it, cash on cash? Is it a multiple? Is it ROI, IRR? And again, you can Google all those terms, but just understand what
I was just about to have you go through some of them. And then I was like, there's too many. We don't have enough time. That's another episode. Wanting to go through these really quick from like me asking you so that people can have kind of your philosophy and your experience. So let's start at the bottom and go
Sure,
work
so
our way
look
back
backwards.
up.
Okay.
So what are your targeted and historical returns?
So in our latest fund, we are targeting 8% to investors is what we're targeting for investors. Overall in the fund, we're targeting, the mid-teens. And the reason why, of course, we target that is, we have marketing overhead costs and other costs included in that we want to make sure we have our investors get paid first. And that's why if you look at our funds, we don't put management fees. And again, there's other questions that we have cover another episode about those types of things. But, we want to make sure that our investors get paid first. And we like to make sure we hit our targets, as they say, was it under promise, over deliver, I believe is a typical phrase. But the numbers that we're targeting, for example, in our latest fund, we've consistently been able to maintain, hit those numbers previously. And I believe we can continue to hit them. But, the caveat is, past performance is not a future indicator, and I'm not making any promises, guarantees of any returns as part of this conversation.
And historical returns.
Yeah, historically, they've been, I don't want to say a number, honestly, because the number is been very positive. But, they've been double digit is what I'll use as historical returns have been in the double digit range.
Yeah. And again, I think something here we didn't touch upon too was it also depends how the fund or syndication is structured. Mm-hmm. So is it just a preferred return? Is there upside? That'll affect the historical return number as well. So that also might be something worth asking here. I know you've done a lot of different structures when it comes to your funds. So next question is, are you sponsoring any other investments? If so, how many?
Yeah. So we have in the past sponsored other investments. We've essentially closed all those other funds and in the process of closing many of those other funds to focus primarily on this one fund we have going on. As we mentioned, we've ramped up staff from you and I to, I lost track
10,
now.
Yeah, 10 people.
Close to 10 people.
10 plus, yeah.
That we have either, on board or coming on board in the next 90 days.
Have you ever, and you answered this one, have you ever lost an investor's principal?
Yeah, never lost their principal. I've had deals where, yes, I've lost money, of course, but never anybody's principal.
And I actually skipped this one because I'm doing these from memory. How do your investors access and receive accurate information on their investments? So
for our investors, they've got several avenues. We will, for especially this new offering, they have a portal that they can look at, log into to see the portal. We have an investor relations team that they can email, set up a phone call with. So we are going to make sure that, we can answer questions in a timely fashion and give them access to all of their information and data. And also, I'll just mention, because it is also registered with the SEC, all the financial information and the semi-annual report and annual audit reports are public information. Oh, yeah. What geographic markets does the company target? 48 continental states, essentially, we're not married to a specific market. Yeah, we're not married to a specific market. There's markets that we, of course, prefer over others, but we look at opportunity. And we do not, for us, opportunity exists where in some instances where people don't have good teams to go in. And for us, when I say a team, I'm speaking of an attorney, boots on the ground, contractor, property manager, realtor, servicer, and attorney are, I'd say, the two people who, would be sitting closest to us at the proverbial table. So please describe the company's overall strategy and philosophy. Oh, we don't have time for this. I know. I just raised my hand to say, keep it short. Yeah. You want, our philosophy is we're buying distressed first position notes with the attempt to try and provide forbearance and modification loans to borrowers to try and keep them in their property and create a win-win situation for all the people involved. That's really. Thank you. Yeah. If people are not watching the video, Lauren's thumbs up, tell me to cut. I was like, that's good. That's good. Because we could go on forever about this. This is like
again, like we mentioned earlier, probably one of the longer questions, but I feel like people who have listened to us and know, that you've been in notes for quite some time kind of have an understanding of your philosophy. So you summarize that well. Do you know approximately how many deals you've gone through full cycle? Hear that range?
Yeah, I was going to say hundreds, and again, my background's very different, because I've, done full cycle, 300 to 400 notes. I've done new development for condos, apartments, office, retail, hospitality. I've done an MRI suite, which are actually really cool because it's all like leaded, everything's lead around it. So the MRI machines don't come out and stuff. And MRI machines are very expensive. See, I can digress very easily and talk about different experience, but go ahead. You want to interrupt me?
I was going to say, so that's how many specific asset deals you've gone through. How many deals have you done with either individuals as a JV or funds?
Pretty close to the same, because when I started, I started, of course, with my own money, and I did 25 deals on my own, roughly, before I started taking on, outside investor money. And then I grew by starting doing JV deals. And then I got to like 25 to 50 JV partners, and then was like, oh, this is way too much because each deal is like its own little company. And then I did a fund that mirrored the JV deals. And then that fund was successful, and we kind of rolled into fund 2, 3, 4, 5. And now I think this is my 6th syndication.
And if you're wondering what JV syndication funds, all that, we did an episode a few episodes ago about that. So because I was going to stop you and say, can you explain this? But we did a whole episode on it. So I think it's like 4 episodes back. Have there ever been any criminal charges or investigations against the company or any of its principals? Will the main principal survive a background check? I can answer this.
Sure, go ahead.
Only because when we went through the qualification process, we had to get background checks. So yes, we can say we will all survive background checks, and no, there have not been any criminal charges. As I just alluded to, part of the qualification process for this specific fund was kind of doing background checks and assessments on the founding principles.
And I also am a registered mortgage loan originator, which does fingerprint background checks as well. And that gets checked every year. The only thing I think criminal that you could say I've done is that jacket I wear on our website is probably criminal. So go over 70investments.com, check it out, and or invest.70investments.com to check it out.
Yes. Oh man. I don't even know where to go with it now.
Tony's in the background going, cheering for me.
You just outed yourself. It was like the joke we always, make fun of you for, is this oversized jacket. And now you just were like, I'm going to go for it. It's not as fun anymore. So good job. Okay. Have you or any of your companies or properties filed for bankruptcy?
No.
How long have you been in real estate investment?
Can I count that high?
Over 25 years.
Yeah, I've been in real estate 25 years. I've been, personally, I've, bought my first property my first primary residence. We were actually supposed to close on 9/11/2001. I was supposed to close on my first property. Got pushed. So, but yes, and since that time, like I said, I started in 97 working for a large commercial contractor. University of Connecticut, South Campus Dorm and Dining Hall.
That was your first project?
That was my first project.
Yeah. Okay. So that was all of the questions we walked through. And so this list that we pulled from these top 10 questions, these are our top 10. However, on our website, we do have a downloadable ebook that we put together that is the top 5 strategies that we talked about last episode, combined with the top 20 questions that you would want to ask once hopping on the phone with a sponsor before investing with them. So if you're like, I don't remember what those questions are, or you're going to be hopping on a call, I know I've actually had someone use our ebook, and I don't want to say against us, but has showed up to an investor call and asked me every single one of these questions. So I thought that's kind of what gave me the idea to be like, oh, we should talk about this on the podcast. So it is on our website. You can go ahead and download that. There's, it's free. Chris, do you have any final thoughts?
I'm good. I enjoyed this episode. It was great seeing you again today. And yeah, I've got nothing else. I'm good. Thank you, everyone, for listening to this episode of the Creating Wealth Simplified podcast. Make sure to subscribe to our podcast on your favorite listening station, and also head over to YouTube to subscribe for new videos and updates we have there. And thank you for listening. And as we like to say, also go out and do some good deeds, pulling that one back a little bit too.
Okay. Thanks, guys.
Thank you. Thank you for joining Lauren and I on this episode of the Creating Wealth Simplified podcast. Each week, we bring you expert education, experience, and information in a digestible format to help you identify investment opportunities so you can build wealth through real estate and take action toward your financial goals. Enjoy the show, share with a friend, or subscribe to the show and leave us a review.